I found a new magical indicator combination on TradingView that will turn you profitable after watching this video. These tools have just been released on TradingView, so no one knows how effective they are yet. The indicators are 100% free and they're better than some premium tools out there. In this beginner-friendly tutorial, I will show you my personal strategy with these indicators to identify highly profitable buy and sell signals in any market. The strategy is so accurate that it hardly gives any losing signals. It is important to mention that this trading strategy can be used for trading cryptocurrencies, stocks, futures, and major Forex pairs. The best timeframes are 5 and 15 minutes. However, the strategy can also be applied to longer timeframes, such as 1 hour and 4 hours. Currently, I am viewing the Bitcoin price chart on the 15-minute timeframe. The trading strategy I'm about to teach you consists of 2 free indicators. Once you've logged into your TradingView account, open the indicators and in the Search tab, type the name of the first indicator, the Ultimate Buy and Sell Indicator by Sherlock MacGyver. This is one of the most professional free indicators on TradingView. It can provide excellent buy and sell signals, spot periods of consolidation, as well as periods of high buying and selling pressure. It has been designed with a large number of customization options intended for advanced traders, but you do not have to be an advanced user to simply use the indicator. This indicator creates its own candles, so you have to go into your main settings and turn off the body, border and wick color settings. Using a dark background is also recommended. The Ultimate Buy and Sell indicator mainly relies on the RSI indicator with Bollinger Bands for signals. The Ultimate Buy and Sell indicator creates 2 types of signal. The first type is called watch signals, which are various Bollinger Band crossing events. This could be the price crossing Bollinger Bands or the RSI crossing Bollinger Bands. There are separate watch signals for buys and sells. Buy watch signals are colored orange to match buy signal candle color and bright purple to match sell signal candles. The second type of signal is buy and sell signals. In order for most buy or sell signals to be created, there must first be a watch signal. There is a look-back period, or length, for watch signals to be used, and after that, many candles have passed. They will be ignored. You can set a length to look back, as well as a time to wait before creating any. What this means is that if there has previously been a sell signal, you can tell it to wait 10 bars before creating any buy watch signals. You can then also tell it that it should look back 10 bars from the current one in order to find any buy watch signals. This is useful in order to keep signals more spaced apart, as some bad signals come quickly after another one. For example, you may get a sell signal where the Bollinger Bands are tight. Then the price easily drops down into the lower band, creating a buy watch signal. Then you get a fake or short pump up, and it says buy, but then the price drops dramatically afterwards. The wait period can ensure that the sell stays in effect longer before a buy is considered by blocking any buy watch signals for a period of time. There is an option to color the background green during the full duration of a bought state, or red during the full duration of a sold state. I recommend hiding the backgrounds, however it's just a personal preference. Although this indicator gives excellent buy and sell signals, it is not intended to be used on its own. This is why our strategy consists of 2 indicators that cancel each other's signals if the conditions are not met. The second indicator is called Fibonacci Bollinger Volume Weighted Deviation by T. Karolak. The Fibonacci Bollinger Volume Weighted Deviation indicator presents a novel approach to market trend analysis by integrating Fibonacci ratios with the classic concept of Bollinger Bands. Designed for traders who incorporate Fibonacci levels in their market analysis, this indicator adapts Bollinger Bands to a user-defined Fibonacci ratio. It creates dynamic upper and lower bands around a simple moving average, offering insights into price deviations and potential overbought or oversold market states. Incorporating volume data, this indicator provides a volume-weighted perspective of price deviations. This feature is crucial in gauging market sentiment, as significant volumes linked to price deviations can signal strong market moves. By plotting these deviations and emphasizing those that significantly diverge from the volume-weighted average, it aids in pinpointing potential turning points or key support and resistance zones. In practice, the indicator can be used in various ways. One of the most effective ways we found is to go long when the indicator breaks above the upper band. This signals strong buying interest that often leads to a long-term trend. Watch how the price increases after this initial spike. The opposite is true for sell trades. The best part of this indicator is that it keeps you out of low-quality signals. When the indicator line is between the bands, the market participants show no interest in buying or selling the security. Let's now discuss the exact conditions for opening long and short trades. We'll start with long trades. The first condition is to have the Fibonacci Bollinger Volume Weighted Deviation cross the upper band, indicating a high buying interest. The second condition is to receive a buy signal from the ultimate buy and sell indicator at the time of crossing. The stop loss is placed below the lower band. Set a fixed profit target. When you receive a minor sell alert, close a portion of the position and move the stop loss to break-even price. Remember, this is just an example of a trading strategy. You can modify the rules depending on the markets and timeframes you trade on. This trading strategy also works for sell positions. Let's define the rules for short trades. First, the Fibonacci Bollinger Volume Weighted Deviation should cross below the lower band, signaling an increase in selling pressure. Second, the ultimate buy and sell indicator should produce a sell signal. If these two conditions are met, you can confidently sell the security. Place the stop loss above the upper Bollinger Band. Set a fixed profit target. I recommend targeting a minimum of 2 times the risk. Close a part of the position once you receive a sell alert. This simple yet effective trading strategy can easily be automated into a profitable trading bot with Pionex. In my previous videos, I explained the exact process of creating such a bot step by step. If creating your own trading bot is too complex, don't worry. On Pionex, you can find dozens of highly profitable algorithms for free. This is without a doubt the best cryptocurrency exchange for algorithmic traders. Check it out. The link will be in the comments.